we're going to kick this off right now. So, welcome, as I said, to our 22nd episode, 2025 State of Crypto. We're doing this a little early because I'm sure you have a lot of questions as I speak. Bitcoin has been, recovering, and we're at almost $99,000 again. Very curious where we go from here. For those who don't know me, I'm Flo. I'm the founder and CEO of Blockchain North. Bobby is traveling today, but I have Paul behind our Blockchain North channel supporting me. Quick intro to Blockchain North. We're the media company in Canada focused on blockchain, and we created Crypto Canadians because we wanted to have a space here in Canada for conversations, for showcasing our leaders, our stories, and yeah, to just basically build a community at home. Before I forget, a shout out to WonderFi, who is the sponsor of our spaces as well as our newsletter. For those who don't know, WonderFi, it is the largest regulated crypto company or group of companies with 1.7 million user accounts. I assume it'll be more soon across platforms you might know like BitBuy, CoinSquare, and SmartPay. They recently expanded to the Asia Pacific region. They're building their own layer 2 blockchain and crypto wallet with the aim to make an impact in the ever-growing DeFi space. Want to learn more about WonderFi? Go to wonder.fi or follow them here on X, or both, of course. So, quick intro of Alex Tapscott for those who don't know him, which would suggest that you have not read some of the most important books in the industry. He is the co-founder of the Blockchain Research Institute in 2017, which is a while ago now. Quite impressive in and of itself. Great to have this at home, by the way, in Canada. He's also the co-author of Blockchain Revolution. I always tell people when they ask me anything about crypto, I say, look, I'm not going to give you financial advice. Read Blockchain Revolution. Read the Bitcoin Standard, maybe. But really, a book that has definitely been a big part of my own education. Last year, he also authored his own Web3, Charting the Internet's Next Economic and Cultural Frontier. Blockchain North was a partner of this book launch tour across North America, and I think even beyond. He's also the managing partner and portfolio manager of 9 Point Partners, which is an alternative investment management firm. And he's a frequent speaker on the Global Tech Tour. Alex, are you just back from Sao Paulo?
I am just back from Sao Paulo, Flo, and thank you for that wonderful introduction. I'm very delighted to be here.
I tried to stick just to the facts, but it's quite impressive in and of itself. So a warm welcome to you. A reminder to everybody who's joining us right now that this is an interactive conversation. I'm going to be asking Alex some questions, but if you want to ask a question to him or even to me, if you want to just chime in, of course, keep it short because we don't have a lot of time. But just raise your hand, and we, every week we get a lot of questions, and we love that. So we're gonna kick it off. Reminder that we also have a newsletter coming out every Wednesday. You can go to blockchainnorth.ca/newsletter to sign up. I'll be asking as well Alex some of his handles and links at the end of this call. So let's get going. So the first topic, and it relates to this book Web3 that came out a year ago. Alex, in that book, you really frame Web3 as the next major phase of the internet. And so I'm wondering if you could maybe draw some parallels with the rise of Web3 as well as the internet, let's say 30 years ago, and how you see, traditional tech giants like Google and Apple adapting, resisting. Where are we at right now?
Well, thanks, Flo. I appreciate that setup, and as I said, I'm delighted to be here. We've been talking about this for a long time, and Web3 is the latest book that I put into the market to really help people understand what's going on. But the big insight, as I see it, is that blockchains and crypto basically are representing or ushering in the second era of the internet. And Web3 is part of that. But really, this is an almost even deeper and more fundamental shift, which is that for many decades, we had the internet of information. And, the internet as we know it today is a very useful tool to share information, to communicate and collaborate online, to publish and upload your own information and so forth. And it's had a really big impact on tons of industries, right? The internet's really just getting going, and it's already upended, media-based industries, how we consume content, the news, magazines, TV, you name it. But the thing about the internet is that when you use the internet to, move or share information, you're not moving an original, unique thing. You're moving a copy, and you're retaining the original. So for most kinds of information, like that's actually a great thing. It's almost like we have our own printing press for information. So if I post something on X, everybody can read it. If I upload a video to YouTube, it's available for all to see. If I send you an email, I can send the exact same email to someone else. So having a printing press for information is a really powerful tool, and it's helped to really democratize information. But when it comes to things that have value, things that basically require scarcity in order to have any worth, things like money or financial assets like stocks and bonds or art or collectibles, titles and deeds, you name it, being able to create copies is actually not such a great thing, right? It's okay if I send you an email with a PDF of my latest research report or something, but it's not so great if I send you $20 and you don't know if I can send a copy to someone else. So good to have a printing press for information, not so great to have a printing press for money and assets. And so throughout the first era of the internet, we had to rely on intermediaries. And that was unfortunate because they added cost, they slowed things down, they excluded a bunch of people, they, expropriated data. In general, they sort of, I think, took a bigger tax of the internet's bounty than they should have. So now we're entering the second era, from an internet of information to an internet of value or internet of assets. For the first time ever, we have a way to enable individuals and businesses and institutions and everyone else to basically move money and other things of value peer to peer without an intermediary. In this exact same way that the first era of the internet allowed us to move information peer to peer without an intermediary, like the postal service or a telephone company. And that is something that is pretty profound. And I think people are just beginning to really understand the impact of that. And this all really began because of Bitcoin, right?
Yeah.
Um, Bitcoin, I've been talking about Bitcoin and advocating for Bitcoin for a very, very long time. So, for as an example, like our firm was one of the first to launch a closed-end Bitcoin fund. We're the first to launch a Bitcoin ETF. The book that we wrote back in 2014 or 2016, excuse me, was blockchain revolution, how the technology behind Bitcoin is changing the world. And what was really remarkable about Bitcoin um, was that it actually worked. And this is something like I think a lot of people don't really fully appreciate, which is that people have been talking about programming money into the internet for a very long time, like well before Bitcoin came along. Bill Gates, Mark Andreessen, Elon Musk, all of these brand name people throughout the 90s were basically saying we need to find a way to put e-money into the web. In fact, Mark Andreessen said the original sin of the web was that there wasn't a way to program money natively into it. But all of the sort of the ideas and the attempts at trying to figure out a way to do this didn't work. And Bitcoin did work. And it worked because it helped to solve the double spend problem. How do you ensure that when you move something of value peer to peer, you don't leave behind a copy or you can't send the same thing twice? And it turns out that what works for Bitcoin can work for almost every other asset in the economy. And that means it's going to have an impact on every industry. So that when I say the second era of the internet, that is exactly what I mean. The internet of information is giving way to the internet of value.
So that sounds obviously very exciting, and most of us in this room right now, already use Web3 and perhaps invest and trade and do other things. But what I'm wondering is, I mean, our economies, especially in North America and especially in the U.S., is built around big tech, and so these companies that we love to hate, but perhaps we do actually love them as well, and they've really fundamentally changed our lives from Google to Facebook to Amazon. I mean, what is the tension, or what tension do you see, unraveling over the coming years? I mean, are they basically just going to, acquire blockchains? Are they going to, just be fundamentally disrupted and disappear? I mean, I'm basically asking you to predict the future, but what is your sense of that relationship, let's say, between Web 2 and Web 3?
Well, I think it's a question a lot of people have. And, the future, I always like to say, is something not to be predicted. It's something to be achieved, and I think for the people who are listening in to this Twitter spaces, you're sort of self-selecting because you have an interest in this stuff, and maybe you want to play a role in shaping the direction of things. So it's kind of up to it's up to you, no pressure, and others to help make that future. What I will say is that in general, um, leaders of the old paradigm have a hard time embracing the new. There are a lot of reasons for that. Maybe they've got an installed base of technology that's hard to switch. Maybe they've got an entrenched business model where the new technology poses a threat. Maybe they look at the new technology, at least in its early stages, and say, this might be interesting, but our existing customer base We're asking for it, or the technology is not ready for prime time. So there are a million reasons to say no, and there's only sort of one reason to say yes, which is that if you're wrong, then it may turn out that you're standing on a burning platform where the risk of doing nothing is far greater than the risk of doing something. And so I look at the world today, and I see a lot of big corporations belatedly coming around to the idea that public blockchains are going to be really important. By the way, big companies are not dumb or lazy, and the people who run them are typically pretty intelligent. So in 2016, 17, like way back in the day, there was lots of interest from big businesses who were trying to understand this technology, looking for ways to implement it into their business. And as a result of that, we got this, first of all, this whole wave of interest, which helped the book be successful, but also helped us to launch the BRI. Like the founding members of the BRI included companies like, you know, NASDAQ, Microsoft, Accenture, big banks, governments, provinces, central banks. Like we had all sorts of big institutions, and to this day, work very closely with many of them. So there was a lot of interest. But at the time, they looked at blockchains as sort of this discrete technology that maybe they could build themselves. And actually, that's something that also is very similar to the first era of the internet. During the first era of the internet, a lot of people in the enterprise world looked at the web and said, "Oh, this is pretty, neat. It's got some good technology. It's good for networking, sharing, file sharing, um, information and so forth. But it's full of degenerates and pornographers. And by the way, the technology is not ready for prime times. So, so we're going to build our own thing, and our own thing is going to be called an intranet. It's going to have all the benefits of the web, but it's going to be controlled by us and a handful of other big companies, or maybe just us entirely. And you know what? Like intranets, intranets are still around. They're used by some governments and some companies. But most of the innovation and most of the economic value that's been created in the last 30 years from the web has happened on the open web. It hasn't happened because of internets. So going back to blockchains, the first wave was okay, Ethereum and Bitcoin, these things seem kind of neat, digital medium for value. Maybe this can help to speed up some business processes, reduce some costs and so forth. Let's build our own. We're going to build our own thing called an enterprise blockchain. And this enterprise blockchain is going to allow us to have a shared ledger between us and a few trusted parties. We're going to, that's going to help us to improve the state of our business. And the thing is, they all failed pretty much. I think that like entirely. Like I'm not aware of any, enterprise blockchain project that today still has any relevance. And what's happened is that most, like in 2017, it was true that Ethereum wasn't exactly enterprise grade. People launched the CryptoKitties project, crashed the entire network, right? So like you're not going to put mission critical enterprise processes on that kind of a network. But what happens with these technologies is they scale and they improve, and they grow, and more people contribute to them, and they gain network effects and so forth, and they become a lot more performant and a lot more useful. So now, if you look at most big companies, where are they building? They're not playing lip service to enterprise blockchain. They're building on Ethereum or Solana or a layer two network or something. Or maybe they're building on Bitcoin. Bitcoin layer two networks have had themselves a big resurgence. So there are lots of examples today of very large companies who are, if not, betting the farm on public blockchains, uh,
Yeah.
who understand that this is the real deal. BlackRock, Franklin Templeton, Nike, LVMH, Microsoft, which is it's the main sort of driver of the Enterprise Ethereum Alliance and Enterprise Blockchain, excuse me, Enterprise on Ethereum. Like these are all examples of big companies that are doing stuff in that space.
Yeah.
So that only partly answers your question, but I thought it's helpful just to explain that.
Yeah, absolutely. I mean, this is meant to be educational. As I said, most people in this room are certainly of a certain level when it comes to blockchain, and I assume several are well beyond me. But we just want to make this useful. We're also recording this, so this will be used by others. What I want to know is, I would say, depending on which day you check the statistics, about 5% of the world has adopted or is using blockchain right now. I think 300 to 400 million people, according to the last estimates I saw. Let me know if you have different stats. That means that 95% of the world isn't using blockchain yet. And so I wonder what you see today as the most accessible use cases of blockchains. Your book, you talk a lot about self-sovereignty, identity, decentralization. But in my life, and perhaps in yours too, when I speak to people, they're still kind of puzzled that they don't really get why they even need blockchain.
Yeah, well, I think that, like, what is the most successful use case for blockchain right now? It's probably Bitcoin as a store of value asset. And like that is just the reality of where we're at today. Bitcoin has grown from zero to almost $2 trillion in size. It's become a mainstream financial asset that is widely held by retail institutional investors, and is, in my view, a really important innovation. For many millennia, we had a store of value for the physical economy, for the industrial age, and that was gold. And now we have a store of value for the digital age, and it is digital in its nature. It's divisible. It is easy to send. It's easy to store. It's easy to prove its existence, and it is becoming more and more systemically important. But I don't think it's going to be the most important use case forever, right? So I think that that's important. Both of those things are important to mention. Yes, it's the most important thing today. Will it be the most important thing in the future? I don't think so. To me, the most obvious answer to this question is that I think every asset in the economy is going to basically be digital and settle on chain. And that includes most fiat currencies and most financial assets, and maybe even some physical assets as well. And we have to look no further than stablecoins to see how this would work in practice. Stablecoins have grown from zero to almost $200 billion of circulating supply in about a decade. And they are now at an all time high, exceeding the peak of 2021, 22. And stablecoin usage to me is really interesting because basically what a token does is essentially democratize access to financial services and improve choice for users in the same way that many other financial technologies that have come before. So, if you look at the history of finance and the history of assets, it's a story of innovation and a story of democratization. And I don't want to get too historical, but it's important to remember that there was a time when the vast majority of wealth in an economy was controlled by a handful of landowning elites. And that gave way to a capitalist system where business owners and investors could be participants in value creation. And so that led to a new class of wealthy and powerful individuals known as capitalists. But it also led to the slow democratization of assets. In innovations of the 20th century, like the invention of the mutual fund or the discount brokerage account or ETFs, helped to democratize things even further. So today, anyone with access to a bank account, which in places like Canada and the United States is fairly ubiquitous, can become an investor. They can own a fractional share of a company in a zero fee brokerage account with as little as like $10, right? So that's where we're at today. But that's only true for some people in the world. There are billions of people in the world that don't have access to that. So to me, tokens are an evolution, not a revolution. They're an evolution from products um, like the ETF, for example, that basically act as containers for value. They are a standard shipping container, if you like, that can be programmed to represent anything of value, including fiat currencies like stablecoins, but also any other kind of asset. So we know that this already works because stablecoin growth has been explosive. And I think that it's going to work for other assets. And the reason for that is that there are billions of people in the world that are looking for a US dollar bank account, but they can't have one. Now with stablecoins, they can. They can open a wallet, they can earn money in USDT or USDC, they can store money in USDT or USDC, they can make payments and send remittances in those currencies. And that's becoming a very common practice in a lot of parts of the world. But once someone has a US dollar bank account, well, what's the next thing that they want? The next thing that they want is a US dollar investment account.
Point.
They want a way to deploy dollars into, investments to get all the same benefits that, a middle or upper class American or Canadian might enjoy, right? With access to an RRSP, a TFSA, and all these other things. But they don't have access to that. But with Web3, they do. So the wallet, to me, is the software interface for the new internet of value. In the same way that the application ecosystem on smartphones was the software interface for the mobile web, and the web browser was the software interface for the first era of the internet, right? The web 1 era.
Mhm.
And the wallet acts essentially as a gateway, not just to move and store Bitcoin and Ethereum, but to be in control of money and wealth, and to be able to steward and custody that according to your own needs. And that is something that is really important. So I was just that you mentioned at the outset that I just came back from Sao Paulo.
Yeah.
Brazil as a country has seen crypto trading exploding. But unlike in Canada or the US, where the majority of volumes are still for investments and speculation, if you look at the volumes on platforms like Coinbase or WonderFi, it is a lot of people investing in Bitcoin for the long run because they think it's going to go up in value, right? Unlike in those parts of the world, in Brazil, according to Reuters according to the Central Bank of Brazil, which just put out a report that was published by Reuters, 70% of all crypto transactions are stable coins. They're basically people using fiat to buy USDC and USDT. So there are people who live in parts of the world where the local currency is unreliable, where it is not, where it loses value, right?
Most of the world, even.
I mean, actually, every fiat currency is designed, it's programmatically designed to lose value over time. But
Yeah.
it just so happens that in Canada and the US, it loses value at a slightly slower rate. So we don't notice it as much. But like in a lot of parts of the world, like your wealth can be annihilated through inflation or hyperinflation. And so people in these parts of the world innately understand that, which is why there are more US dollar banknotes in Argentina than in the United States. There's more cash, US dollar cash in Argentina, a country of, I don't know, whatever, 50 million people, than in the entire United States of America,
Wow.
because they understand that their local currency could lose its value. And the financial system is rigged so that they can't easily move money into other assets, right? There are capital controls, there's limits on how much money you can move out of the country and so forth. So there's already this innate understanding of the need to have better and more reliable mediums of exchange and stores of value. And that is the reason why stablecoin growth is happening. Stablecoin growth for non speculative use cases, which is important to understand, for payments and savings, is growing much faster in those parts of the world than it is anywhere else. And in the same way that, the web, the first era of the internet, if you will, had some of its biggest impacts in some of the most developing parts of the world. Um, this era of the web is having a similar kind of impact.
Apologies, I had a question come in that I was just reading as you were finishing your answer. So before I read you the question, I want to just shout out a few people who are in the room because this is about community. Lawrence Lay, who I'm seeing this afternoon from George Brown College, we wrote a book about Cardano recently. Jerry from Bitcoin Base with us. Alex Collins, there week after week. Appreciate you. Karen Powell, who has a question for you in a second, but also some new faces. Shima, welcome. Chris, Justin, Jeremy Clark. Yeah, great to have you all. Craig Addy, I recognize you from previous calls. So here's the question, Alex, from Karen Powell, who is, from what I remember, a graphic designer, an artist. He's saying, how do we simplify Web3 education for beginners? A lot of my fellow artists are interested in Web3 and NFTs, but have a challenge in understanding the tech and the ecosystem. And I was at an event yesterday after the CDC forum where I was asked that exact question by a painter, like a physical painter, who wants to find new avenues, I suppose, to distribute and to monetize their art. So yeah, where do we begin when, again, we don't understand the technology, but we want to get in? Oh, did we lose Alex? I think we lost Alex. Okay. Well, I'm not going to really try to answer that question. There he is. Can you hear us, Alex? We're just going to get him back in about a second. Alex, I think you're back with us. Yes, that's good. Can you unmute yourself? Yeah, we hear you. No, not sure what happened.
For some reason, it just popped up.
No worries. Did you hear the question?
I did hear the question. Okay, so the most important thing that anybody can do if they want to learn about Web3 is to buy my book, and to do so in massive volumes. There's no
Or you're telling people have to buy more than one book. They have to buy 3 books.
there's no Black Friday sale going on right now. But if you buy this book and see me in person, I'll sign it for you.
It is a fantastic book, by the way. I mean, I'm really, really a reference. Let's put it this way.
You know, I'm half joking only because I think it is actually a pretty good book, and it is a good place to start because the book is meant for a wide audience, and we say so basically, or I use I use we. Maybe I'm just feel like I'm always speaking on behalf of the industry as a whole. But in the book, I basically say like maybe you're a student who's trying to understand if Web3 is right for you as a career. Maybe you're a business person that wants to know how this technology is going to impact your industry. Maybe you're a creator that is looking for a way to monetize their work and connect more with their fans. The book is meant for all of those different people, not just the hardcore technologists, who are pushing this new economic and cultural frontier. But I do agree with you, Karan, that there are. I think that education remains one of the most important and challenging things when it comes to really any new technology, but I think in particular this one. So what I always tell people is like, number one, become educated. And yes, the book is a good place to start, but there's lots of others. Number two, personal use. Personal use is the biggest precondition to understanding. Like you can listen to a 5-hour podcast about large language models, and you'll probably learn a lot. But you'll probably learn a lot more, drafting 100 prompts in ChatGPT and seeing how it reacts to you, and learning how to use those kinds of tools. Similarly, with Web3, it's like you want to know how digital scarcity works, and how you can send money to peer using a cryptocurrency or something or other. Well, just do it. Do it, and
So set up a wallet is what you're saying.
yeah, set up.
That's step one.
Maybe set up an account with Wonderfly, or one of these other companies. One of these are called what I like to think of sort of as on ramps, in part for helping people to onboard and understand how to use this technology. I think that um, trying stuff out is very important. And unless you do it, you're never going to learn. And then the final thing, I would say, which is act now or act soon, right? I think that probably the best time to learn about blockchain and AI and extended reality and many of the other emergent technologies that I think are going to shape the next decades of our lives. The best time was maybe a few years ago, but the next best time is right now. Like I said, if you're on this thing and you're listening to me talk and you're taking time out of your day, it's because you've already expressed an interest in this kind of thing. And you're either looking to do more yourself, or you're hoping to influence others. So, as I said, like you're already an early adopter, you're already someone who's taken an interest in this stuff. So just maintain that advantage and continue to follow through.
Okay, so basically educate yourself, read the book, Web3, read Blockchain Revolution. I would actually think maybe that one, and then Web3, but that's my personal opinion. The Bitcoin Standard, probably another great reference. And like Alex said, there are many others, and online resources and podcasts and so on and so forth. Number two is create a wallet, basically experience the technology, try it out, because obviously there's a learning curve there. And then number three is act immediately, act as soon as possible, because of course you're already late in a way, and so you have to play a bit of catch up.
Ad flow, which is,
Yeah.
and it depends on who you are, right? So, if you're an artist and you're trying to figure out, or creator, like, is this legit? NFTs, should I be, minting my work as an NFT and selling it? Or, should I be publishing my music to Web3 native services like Audius? All these kinds of questions. Like, I think at that stage, you're definitely in the education and personal use stage. But I think once you've gotten past that stage and you've decided to like make a real, this is more for people who want to be not just users, but sort of builders and participants and so forth. The best thing to do is sort of to think big, but start small. take baby steps, right? Like every great journey starts with the first step. Like I think that this was a big problem that a lot of business folks had during the first kind of wave of blockchain excitement, which is they're like, we are going to reinvent our supply chain with blockchain. We are going to move all settlement of all assets in our bank to blockchain or something. And it's like if you start with these massive undertakings, you're never going to get anywhere. I don't think. I think it's just what you're going to do is you're going to do a proof of concept or a pilot project. You're going to say, you know, in a narrow kind of closed test environment. This works great. And then you're going to go to the business leaders and all the different groups, and they're going to say, "Beat it." We're not about to change the way we do business overnight because I would
Yeah, be realistic about your expectations.
be realistic and try to do something that's commercial that can actually work in practice. And I think of like what a lot of asset managers have done. For example, BlackRock with Biddle. So BlackRock started off with the ETF and had a massive blockbuster on their hands with this Bitcoin ETF. And once they're like, okay, there's definitely product market fit here, they launched a fund on the Ethereum network,
Yeah,
and a money market fund that was offered as a token that certain people, accredited investors, could buy. And that was a real commercialized implementation of a new product, which on its own is completely a complete rounding error for BlackRock, right? Like Biddle is not going to move the needle, but it is something that says, you know what? If this worked for this, it can work for something else. So think big, start small.
yeah. So I want to ask you a couple of more specific questions. You have set an incredible context here for us and historical background and a lot of very interesting facts as well along the way. I want to ask you about Ethereum. When I interviewed you probably about a year and a half ago, I had just read Blockchain Revolution, and in the book, as well as in the latest one, you talk about Ethereum, and you've even said in our interview something along the lines of, Ethereum is Canada's biggest, let's say, business export ever. People would think about BlackBerry, perhaps now Shopify, but of course, Ethereum is a platform technology, so its potential is, excuse me, far greater. However, we have seen the rise of other layer ones over the last couple of years. And in particular, Solana, I think, has really shined significantly. And in some cases, people would say, out competed Ethereum in terms of, speed, for example, or cost. I'm wondering, in your one of your latest newsletters, you really defend Ethereum against claims of irrelevance. Uh, we're on the cusp of 2025, and I'm not going to ask you if you think Solana is going to, the price of Solana is going to go faster than Ethereum. If you please go ahead. But yeah, what is your take on Ethereum's, let's say, competitive position right now versus these other options?
Well, the piece I wrote was "Report of Ethereum's Demise or Dead Wrong," which is basically paraphrasing a Mark Twain quote, which may be misattributed, which is that reports of my own demise have been exaggerated when someone's circulated a note saying that he had died. So, pardon me. Look, Ethereum is the most successful Canadian thing of all time, private sort of sector business thing. It's hard to say companies is not a company, but let's call it a business or a venture. Even today, I don't know what CoinGecko says, but the market cap of Ethereum is 435 billion US dollars. 435 billion US dollars. That's triple the size of Shopify today. And Shopify is an amazing business and an incredible success story. And I think Shopify might eventually be $1 trillion company as well. But
But you think Ethereum will be a lot bigger, even?
yeah, well, bigger than a trillion for sure. So if you ask the average Canadian, well, the average Canadian does no clue, but you could ask the CEO of the biggest banks and companies in the country and say, what is the biggest by market value or most disruptive Canadian venture of the last? You could even make it easier for them, say like the last 25 years, because maybe they'd say, well, there was a time when Bombardier was really important or Nortel or something, and they wouldn't have no clue. I would say you'd be like 1 for 80 if you ask people that question, which is crazy. This is like I've written a lot about Ethereum. I've also written a lot about Canada, and Canada is an incredible country, and I defend it often. And people think, you say they always tell me like, "Oh, you're such a homer. You're always trying to defend Canada." I say, "I'm not a homer. I'm just a patriot. I care about the country, and I want to see it be successful. I want to see the people in this country be prosperous and happy." But we have some problems. One of those problems is R&D. We rank towards the bottom of our peer group when it comes to both private and public sector R&D. Competitiveness and productivity, we're typically towards the lower end of the ranking of our peer countries, right? So, like on a global ranking, we're still very high, but we try to benchmark ourselves against the States and Japan and the United Kingdom and France and these kinds of places. And when it comes to new business formation, we have had some hits. Don't get me wrong. Like building Shopify is amazing. The fact that that happened in Canada. RIM was an incredible company for a while, but we don't produce them at the same clip that we'd like to. So when a bunch of really smart, kind of crazy entrepreneurs come up with the idea for a new way of doing computing, which is what Ethereum sort of was designed to do. This is supposed to be a new platform for decentralized computing for this next era of the web. Um, what do we do? Do we embrace it? Did we celebrate it? Did we fund it? Did we, encourage them to hire more people in Canada? No, we were mostly disorganized. It wasn't out of malice, but we didn't proactively take any steps. And a lot of those people decided to leave the country and set up elsewhere. And even the Ethereum Foundation domiciled itself in Switzerland as a result. So to me, that was, an economic opportunity lost on par with like the Abro Arrow. Scrapping that program was a disaster for Canada, and having Ethereum leave the country was similarly a big disaster. So there's a lot more that we. So that was a mistake. Okay, well, there's still some things that we could be doing today to create the conditions for others, the next Vitalik, Buterin to come out of Waterloo or U of T or Carleton or McGill or wherever to have a place to, a space to innovate. And I don't think we're doing enough. And I wrote an op-ed for the Toronto Star last year around the time of the Blockchain Futurist Conference, where I basically said there was a parliamentary committee that came up with a couple dozen recommendations for how to create the conditions for Web3 to succeed. We should probably just act on them. We should try and turn those into law because a lot of them made a lot of sense. So there's already a kind of a rough template for what can be done. Okay, so that's Ethereum in Canada. In terms of the topic of Ethereum vis-a-vis Solana and others, my view is that, yeah, it's just massively overstated, and that actually competition is good and may even be good for Ethereum as well. Like if you, like me, believe that most assets are going to be tokens represented on chain. A lot of business processes are going to be conducted by a smart contract. That the Web3's whatever 200 million users is going to scale. Then we're going to need all the block space and all the networks that we can kind of get our hands on. And that includes Ethereum and Solana and all these other and layer twos and other alternative layer ones and EVM compatible chains like Avalanche and so forth. And if you look at the breakdown today, um, I think something like half of the entire TVL of DeFi, for example, is on Ethereum. Sorry, 55% of the 110 billion versus 8% for Solana. 52% of the 185 billion stablecoin supply, as I mentioned earlier, is on Ethereum. Solana has 2.4%. Ethereum generates more in fee revenue every single day and week because people are using the network. Nobody's putting a gun to their head saying you got to pay those fees. People pay fees because they find the network provides value and it's useful. The network generated $58 million of revenue just last week. So these are all signs to me of a network that is thriving, not one that is dying. Now, it used to be that 100% of TVL was on Ethereum and 100% of stable coin supply was on Ethereum way back in the very early days. But it's a lot better to have a slightly smaller part of a much bigger pie than to have all of a small pie. In 19 whatever 15, Ford was making the majority of cars in America. And by 1925, they were making less than the majority of cars, probably less than half. but the business itself was far more valuable because the number of drivers on the road had increased manyfold during that period of time, right? During that period of mass automobile adoption. And the same thing is true, when it comes to the internet, and it's same thing is true um, when it comes to blockchains and to digital assets and to platforms like Ethereum and others. So I think that you know, um, Ethereum is incredibly important. I think the layer two thesis is helping it to scale. And I think that all these other networks are really neat too. And I think that they could all become very valuable. When you're looking at it from an investment perspective, and this isn't investment advice, but it's just sort of some rough math. Ethereum is a $450 billion market value. How valuable could it get in the next cycle? Well, the most valuable enterprises in the world are big US technology companies. They typically, like Nvidia, Apple, Microsoft, those companies have market values of about $3 trillion. Is Ethereum in a super bull scenario, Ethereum's way more valuable than all of them combined, right? Because this is like in the long term, because it is the
What's long term?
like
Like 2030?
decades. No, I would say like 20 years.
Okay.
This is just like thinking big. Let's say that Ethereum continues to be the leading platform, and all not just Web3 enthusiasts, but every business is using that network in some form or another to move and store value and to maintain records of transactions. And every time that they have to do anything on that network, even with L2s, some fee revenue is paid through to that network. Basically, it's like owning a share of the internet, right? It's like if the internet today were we're a publicly traded company, and you could buy a share in it, you would probably want to do that because it would be kind of accruing all of this value. But that's not what happened in the first era of the web. What happened in the web was that the internet was a thin protocol and it was all open source, and all the value accrued to the application layer to companies like Google and Facebook and Amazon. So in this other model, and this is not a new thesis, this is called the Fat Protocol thesis, which was written like 7 or 8 years ago. The idea here basically is like, yeah, if all economic activity is happening on public blockchains and Ethereum is the leading blockchain, and fee revenue is paid to token holders through staking rewards because of massive use, then that network could be generating hundreds of billions of dollars of fee revenue, right? I mean, it generated 58 million last week, so this isn't like completely bananas. But that's like a multi-decade thesis on Ethereum. The medium thesis is, you know, could it become as valuable as a big tech company? Yeah, potentially in the next cycle. And that would mean, great returns for Ethereum investors. But Solana and others, because they're smaller, there's higher risk, but there's probably more upside, right? Which is generally true in investing in general. Like,
Yeah.
smaller cap, higher ceiling, more risk. And so, it may be that in this cycle, Solana outperform. Oh, you can't see the video. I'm making quotation marks. Outperforms in terms of price, but both have thrived in terms of utility and in terms of becoming more entrenched in the market. Does that make sense, Flo?
Absolutely, and very clear, quite detailed, and also nuanced, which we appreciate a lot here. So thank you very much. Now, shifting gears a little bit because I'm watching the time and it does indeed fly by. Do you have like another 25 minutes, 30 minutes?
That's exactly how much time I have.
Perfect. All right. Well, there you go. I'm pre-science. We always go a little bit over an hour. Um, and we can go a bit back and forth, but I don't want to miss talking about what's happening in the United States. Obviously, the election of Donald Trump is probably the biggest news the crypto space, at least, likes to get excited about right now. He isn't even inaugurated yet, and we've seen a very significant bull run. I think I read this morning the biggest candle for Bitcoin ever, monthly candle that was. So anyway, but those are just some numbers and a couple of facts. But obviously, the expectation is, well, Gary Gensler has already resigned before he was even fired. Trump is positioning himself as the pro-crypto president, which is actually quite a turn of events because he was saying the opposite a year and a half ago or so.
Yeah.
But he's obviously very pro-business. He's gonna do everything he can so that as much innovation as possible happens in the U.S. All of these things theoretically are extremely good and bullish for the blockchain space and for crypto token projects in general. However, and this question was asked yesterday at the Blockchain Consortium Summit by one of the guests, which is Trump also has a history of obviously being quite erratic. He has numerous bankruptcies. He's has been condemned for fraud, and so I mean, and now he is personally invested. He's not just the president. World Liberty Financial, NFTs. He's basically intertwined with the industry. And so, what if his World Liberty Financial, for example, turned out to be a massive rug pull? I have no idea what it is, or but what if similar scandals to what we experienced in 2021 happened again, but this time very closely related with the sitting president of the United States? But where do you stand? I mean, is Trump good news, bad news, or somewhere in between for crypto?
I'm so delighted that the conversation at that event was so balanced and nuanced because I do find that a lot of people have um, I don't know, abandoned their values. And by the way, I know lots of Trump supporters, and I don't begrudge most people for, for supporting him. I'm just simply saying that like a lot of people who probably wouldn't have voted for Donald Trump were like all in because of crypto. And I was like, I think that's sort of an odd position to take. There's lots of reasons why you want someone to become the president, and I also think that there's a lot of as you say, a lot of like risk and uncertainty around around the new president. And that's why we're hosting a webinar in a couple weeks' time, which I would love everyone here to join us for, where I'll be speaking to Chris Giancarlo, the former chairman of the Commodity Futures Trading Commission, which is the regulator likely to take on most crypto regulations, and Perry Ann Boring, who is the CEO and founder of the Chamber of Digital Commerce, which is the world's largest blockchain trade organization. And the topic is promise and peril, basically. Or is this really the golden age of crypto in America? So my view is that I am cautiously optimistic about the Trump administration vis-a-vis crypto. As for everything else, I won't comment because that's not what we're talking about right now. When it comes to crypto, he apparently, as you said, in the last administration, his last kick at the can, wanted to ban Bitcoin, and it was actually Steve Mnuchin, his Treasury Secretary, who kind of helped him talk him off the ledge. So it's not like he has some deep natural affinity for this that goes back many years in the way that he has, like, say, strongly held views on trade and tariffs. So he is someone who is apparently quite mercurial, easily swayed on a lot of issues, listens to the last person that has his ear, can make decisions kind of based on gut feeling. And so it is possible that all of this good vibes that everyone's feeling about the new administration goes the opposite direction at some point. But I would say, plan for the best, prepare for the worst, or hope for the best and prepare for the worst. And so the hope for the best is like, look, crypto is not actually a partisan issue. I think that it has become uh, partisan coded in the last 4 or 5 years, both in the US and in Canada. But actually, the data says that, and Coinbase and others have done surveys. I think Fair Shake, which was the super PAC, has done surveys that basically look at people's political alignment. And as with a lot of other issues, it was pretty split, like 50-50, right? Or 52-48 or something like that. On a lot of issues, there's a lot of common ground between people. And so, of course, there are people in the US that want to see people on the left or whatever, more progressives that want to see crypto regulations, sensible regulations enacted and want to see them be more open to the industry. According to the data, people who own crypto assets and are more likely to use them for payments and other financial services are more likely to be new Americans, underbanked, people of color, all those different groups, right? It's not the wealthy tech bros in Silicon Valley, speculating on crypto. That's the stereotype, but actually the data doesn't support that at all. And also, there's a real progressive argument to be made for Web3. If you're worried about the concentration of power in a handful of large corporations, whether they be banks or tech giants, who are extracting too much value from the economy and are keeping the little guy down or whatever. There is an argument to be made that decentralized technology that puts more power in the hands of individuals, that gives them more choice, is actually a really great thing, right? And similarly, if you're on the right, you can make the same case from a more libertarian perspective. So you gotta find. So even if you don't like Donald Trump, um, if you believe that this technology is important and there's a path forward, then find common ground. Work across the aisle, and maybe we get the kinds of laws and regulations, and I would say more just a culture shift in government towards the asset class that can be really, really positive. So, I like to take a historical lens, Flo. Like if you look back at the internet, many people don't know this, or maybe that's not true, but the internet itself was an initiative of the US government. um, in the 1960s, there's a great book about this on the founding of DARPA, which is the research lab of the Department of Defense. The Department of Defense basically tasked DARPA with coming up with a new networking technology that was not centralized. Because the fear was, in the event of a nuclear attack, if the main central command and control center went down, then you couldn't direct the nuclear launches in all these different parts of the country. So they needed a decentralized network where if one node went down, you could still communicate between the different groups. And that's how the internet came into being. And so for decades, the internet was this tool that was used by government and academics and certain institutions and some technologists, but generally was not commercialized. And then in the late 80s, the government basically gave it away. They put it into the public domain for commercial use. And then in the 90s, they created a whole new set of laws and regulations to set the conditions for the commercial web to thrive, right? So in this example, what I'm simply saying is that you know, the government didn't create Amazon or Netscape or Google or Facebook or Uber or cloud computing or any of this stuff. But they set the conditions. They created the rules of the road, and they took an open and hopeful sort of attitude towards technology
Yeah.
as a way to like create value and innovation and wealth and power for the United States. That was the thinking. Very logical thinking. This time around, for whatever reason, at least recently, including the last Trump admin and the Biden admin, there's been this thinking that, like, uh, this is bad, or we got to sort of protect vested interests, or change should be feared, and that's been really disadvantageous for the U.S. It's caused a lot of offshoring. It's created a legal limbo for good operators in the country. It's made every entrepreneur in the space feel like they're a criminal because they don't understand the rules of the road. So if we can get clarity on anything, and if there's a change of tone at the top that says, you can innovate here, and you have to be law abiding, and if we create rules, you better follow them. But if you can just feel comfortable, then I think that's going to create sort of the halcyon days of entrepreneurship in the U.S. around this technology. And I would say the same thing is probably true around AI and other technologies where there's fear that governments are going to regulate first, ask questions later. So
Yeah,
then
and I want to ask you about other countries as well. Just minding the time, maybe another 10 or 15 minutes. Sorry to cut you off. And also, reminder for our audience, if anybody wants to ask a question. As I said, we have about maybe 15 minutes left with Alex. So raise your hand very soon. Prepare your question and keep it short if you can. So since Trump was elected, and in particular, I would say in the last week and a half or so, and I don't have all the news items in front of me, but we have heard about Pennsylvania. Well, let me backtrack a little bit. So, a reminder that Cynthia Lummis, a Republican parliamentarian, has proposed that the U.S. Create a strategic reserve. When Trump spoke at the Bitcoin conference in, I think it was in Nashville in July, he mentioned that he was definitely in favor of the U.S. Trend, like let's say, turning the Bitcoin assets that they now have through seizures into a strategic reserve, and now we're talking about the U.S. expanding that vastly, all of course to be confirmed from the moment Trump is inaugurated. But since then, since his election, we've definitely had a lot of announcements from Pennsylvania going ahead with a strategic Bitcoin reserve, Brazil, Russia, Morocco, China relaxing their stance, which was otherwise fairly unfavorable. Vancouver's mayor talking about a proposal to put Bitcoin on the city's balance sheet. So a flurry of state, or in the case of Vancouver, city-state, city level announcements in favor of crypto adoption. Is this sort of game theory 101, as folks like Michael Saylor have been talking about for years already, that we're at this tipping point, and state adoption is going to be the next big phase for crypto adoption broadly, and what else does it mean? I mean, how do you see this unfolding in the coming couple of years?
Well, I think it represents just how far the Overton window has shifted around this technology. That window of like, what is the art of the possible? I mean, it's like, what? We're talking about a strategic Bitcoin reserve.
I know.
Countries like the United States, like it makes you feel like you're living in a simulation, which at this point I'm willing to. No,
Yeah.
like, there was the old meme, it's like, "Nobody uses it. Well, only some people use it." And it's like, no businesses use it. Well, only small businesses use it. And it's like, "No governments will own it." Well, now only small governments own it, back when, like, El Salvador and others. And now it's like, you are here on the path towards, like, hyper Bitcoinization, and you're like, "Is this really happening?" Like, you know, I always thought it was a possibility. But, I always felt that central banks, in a way, were sort of, had a vested interest to sort of resist the change a little bit,
Yeah.
and that this was gonna be, many decades, if at all. And so I don't think we're at, like, hyper Bitcoinization, which is this idea that, Bitcoin becomes the foundation of all wealth in the world, and it's used by central banks and businesses and so forth. But it is really kind of remarkable, in my opinion, Flo, like, how far things have kinda come in
Yeah.
this relatively short period of time.
And if I could jump in 2 seconds, I mean, El Salvador, if I'm correct, was in 2021, I think September. So that's 3 years ago. So we basically went from El Salvador and then basically no state adopting it for 3 years to now talks about the US.
Yeah, I mean, you know, like, El Salvador adopted Bitcoin as legal tender, and underwent, like, this big process to try and get people to use Bitcoin as a banking tool. That's not what's being discussed in the US. I think, like, what's being discussed is a little bit more modest, which is, to the extent that the government seizes any Bitcoin, it's not going to sell it immediately, and it's probably gonna and it will bank it, and over time, that will help to create a strategic reserve. That to me seems like, if this is gonna happen at all, that's the most plausible way that it happens. The idea that, the Fed is going to, um, go out into the open market and perform open market operations where it's like buying Bitcoin the way it, like, went into the open and did open market operations buying bonds, back during financial crisis, seems unlikely, at this stage. But, you know, a lot of things seemed unlikely like a couple of years ago,
Exactly.
happening now. So I'm prepared for anything, honestly.
Yeah, but that the very thanks for the correction. That was indeed a very very important to note the difference between making Bitcoin legal tender and basically dipping its toes in the case of the U.S. Because of course people are very excited when we talk about millions of dollars in Bitcoin, but of course that's nothing contextualized to the U.S. Economy and GDP. Alex, we probably have 5 to 10 minutes left, so I just want to actually ask you, what are some of your key messages right now? I mean, you've given us again a lot of context, a lot of information. What is your personal, kind of message to folks, whether they are already involved in blockchain or to those who are not? Because you must have, I'm sure you've evangelized a lot around you, but there must be people in your family or in your friend circle who you still need to evangelize. How do you sum all of this up, basically? And then I'm going to ask you for a few predictions, if you will.
It's an interesting question because, at 9 Point Partners, where I work, we're all about innovation and digital asset investments, and I'm a portfolio manager, and I run, a fund that invests across these different things, and we're not here to talk about that specifically, but whenever somebody asks me for investment advice or where the price of things are going, I always politely decline to comment. Partly,
I didn't ask for price.
but partly because I'm not permitted to, and also just because, like, I just don't. I always feel kind of squeamish with that question. I know you didn't ask that question, so, but, like, when it comes to, evangelizing, I do think, like, if you're my point is, like, if you're in the industry and you own the asset class, and maybe you started a business, maybe you're an investor, maybe you're a user, whatever, like, you can feel pretty good about where we're at. Like, this is a very exciting time in human history. And all the things that you've been working on, you have the chance to, shape the direction of the world. But I also think that, as I said in the Trump sort of comments, it's a time of sort of promise and peril. Like there's lots of reasons why this technology, why Web3 itself may not reach its potential, or why it might get sidetracked. I had this
What's one example of that?
well,
That's a threat that you're
yeah.
talking about.
Well, maybe the technology gets co-opted by the powerful forces that you seek to disrupt. Maybe governments try to ban it, or regulate
Yeah.
that existence.
You literally think that's still possible?
All these things are still possible. Maybe the technology doesn't scale enough to meet the demands. Maybe it's still not ready for prime time, and we have some setbacks that delay its progress. Maybe criminals and bad actors come back in force and undermine confidence, and maybe this time is the death knell. But this is the fatal blow, right? The industry recovered really well from some of the wrongdoing from the last cycle, but we can't keep perpetuating a cycle where crypto creates a platform for criminals. So I think there's lots of risks. As much as I feel so hopeful and bullish and optimistic about all this, I do just think that there's lots of reasons you have to keep your guard up and be vigilant. And that kind of goes back to what I was saying way back at the beginning, which is that the future is not something to be predicted; it's something to be achieved. And so it's not like we just kind of cross our fingers and hope it all works out. Like we can be part of that. We can be part of shaping the direction of the industry in a more positive way.
And that's even more true in blockchain than in other industries, no?
I think it is, and the reason I think it is because every technology that comes along creates lots of positive. Well, not. Let me just say this: like most technologies create lots of positive outcomes, and they also typically create some negative outcomes as well. In economics, there are extra negative externalities to things. And so, if you look at let's go through the sort of different eras of the web. So, the Web 1 era democratized access to information, but it also democratized access to disinformation. Web 2 democratized publishing, allowed anybody to share their thoughts and opinions and photos and so forth. But it also democratized the publishing of hate speech. And, there's been, I think, a resurgence or a platform for extremist views that have been made possible because of the web as a platform. It doesn't mean the web is bad. It just means like this is an externality. So Web 3 democratizes the ability to launch a new business, a startup in the form of a token project anywhere in the world. But it also democratizes the ability to launch a scam and to defraud people. And that's something that is very troubling, right? And it doesn't mean we say, oh, well, throw our hands up and say, well, so what? This is what it is. It's the externality of the technology. We can do something about it. I think that it's important to call out bad actors and to work with government to create sensible rules and regulations because we want the technology to scale and we want people to trust the industry and we want the user base to grow because and not for its own sake, but because we think there's the potential to create a web where individuals have more control, more privacy, where users have more choice, and where people are able to get access to more financial services, new ways to store and move value, where we can create like a world that is more connected economically and more just economically. And I think that's sort of the hope, at least I think that a lot of people have about this technology. And we only get there if everyone if we weed out the bad ones and focus on the good.
Okay. I'm gonna ask you for one price prediction. Feel free to say no, but I think you're gonna want to answer. At the end of Trump's mandate, presidency, 4 years. So we're talking, I guess, end of 2029. Where are we with the price of Bitcoin, roughly?
I'd say somewhere between 50,000 and half a million.
I knew it. Okay. All right. All right. That's fine. That's fair. No problem. Alex, thank you so much. You've been very generous with your time, very clear, always a fantastic educator. Really, folks, if you haven't read Blockchain Revolution, as I said, I would start with that one. And then Web3, which broadens the conversation. We really haven't talked much about AI on this call today, or about Industry of Things. And that's all in that book. So definitely worth reading it as well. And then, Alex, what are some other references? You mentioned an upcoming webinar. Maybe you want to remind us where people can find that. The Blockchain Research Institutes. Just give us a little bit of your publicity.
Sure. Well, you can just follow me on X at Alex Tapscott or on LinkedIn. Post regularly on both platforms. We also have a weekly podcast, DeFi Decoded, which you can get through the 9 Point YouTube channel. And I also write a weekly newsletter, where if you go to 9point.com and click on the digital asset tab, you can sign up for that newsletter too. So yeah, lots of I do a lot of stuff. Hopefully, you can
Yeah.
join me on my journey.
I'm signed up to the newsletter, read it every week. Very, very insightful and quite concise, actually, and usually quite focused as well. One more question on references and how people can educate themselves. Where do you get your information from? I mean, obviously, you must read a lot and you travel and talk to a lot of people, and you have a lot of connections in the industry. But for the common mortals like us, what are other references or books or gurus that you like?
Well, I think that Andreessen Horowitz has a great database that material. It's called the Crypto Canon. It's available on the A60T website. So, I mean, that's like a very deep dive, but there's lots of good stuff there. I actually learn a lot from hosting a podcast. We try to bring on guests. Like I've hosted.
Me too.
Yeah, no, it's interesting. Having the way to learn is to read and then uh, to speak about it and then to write it down, right? So that's like my process. So I'll read about it from primary sources and from the news and so forth, and then I will speak to people on the show, and then I'll try to synthesize my thoughts in the weekly note, and that process helps to commit it to long-term memory and helps me to understand it a lot better.
Very useful. Here's a little how to learn, how to build your knowledge. Well, again, Alex, thank you very, very much. Shout out to everyone who joined today. Lots of familiar faces, some new ones too. Shout out to you, Michael Vogel. I was with your and that's Coin CEO yesterday. Sorry, I'm blanking out. It's been a pretty hectic week. Fraser Matthews, that is the name I was looking for. But yeah, shout out to everyone. Heads up that next week we're back on Thursday at noon. Apologies, we had to move this week because of the summit yesterday. But next week Thursday at noon, and every week Thursday at noon Eastern time. So next week will be another special focus on stable coins, because of course there's a deadline. Who knows? It might be pushed again, but we are supposed to get more clarity on stablecoin regulation by the end of this year. So we'll have Morva Rohani from the Web3 Council. We'll have Alex McDougall from Stable Corp. Couldn't think of better speakers, and we'll confirm a third speaker if possible very, very soon. For the rest, if you want to continue this conversation, go check out our YouTube channel. Lots of recent interviews. We've done a whole bunch of shorts that we basically shot yesterday at the summit. Some fun ones too. So you'll see those roll out by the end of the year, and you can find us on all channels. Alex, again, I thank you very much for your time. Let's do this again, and I wish you happy holidays as well, since we might not speak before then.
Yeah, thank you. I really appreciate it. Thanks everyone for taking the time. I can see most people been on the entire time, so I really appreciate the time today. And yeah, let's keep going.
Sounds good. Let's keep going. All right, take care, folks. See you around. Bye now.